Are we approaching the end of the HECM refi boom? Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage. Good day and welcome back to the Industry Leader Update. Last Tuesday brought us a rare display of sanity of all things from Washington, D.C. Economically speaking, it was as if the fact that the earth is actually round but not flat had been discovered. Eureka! Treasury Secretary and former Federal Reserve Chair Janet Yellen conceded that interest rates may have to be increased to prevent the economy from quote-unquote overheating. Now that's D.C. speak for preventing runaway inflation, something that the Federal Reserve has not always succeeded in doing. Yellen tempered her comments, stating that she's not so much concerned about inflation, but should it require attention, there are tools to address it. And that tool for the central bank is to increase interest rates. Does that mean that the government spending spree is now over? Doubtful. Both parties have proven themselves to be accomplished spendthrifts. And while Yellen no longer pulls the levers at the Federal Reserve, her words did capture the attention of Wall Street, economists, and President Biden himself. The factor that will determine if or when the Fed does increase rates is transitory inflation, if it becomes entrenched in the American economy for an extended period of time. Now, on this show, I have repeatedly expressed my concerns that our central bank's massive infusion of cash into the American economy may dramatically increase the cost of goods and services. Outside of what a gallon of gas or milk or lumber may cost in the future, any policy change by the Federal Reserve will have a notable impact on reverse mortgage borrowers and lenders. And a good place to begin to measure the potential fallout of that rate increase can be found in HECM to HECM refinances. Low rates have inflated HECM production, with refinances of existing HECM loans representing a historic percentage of new FHA case number applications. Just how much? In March 2020, as the pandemic hit our shores, 24% of all FHA case numbers were from HECM to HECM refinances. Fast forward 1 year later to March of 2021, that percentage doubled to 48% of case numbers. That's a 100% increase. That means nearly half of all HECM loan applications are from reverse mortgage borrowers seeking to extract more of their home's value, courtesy of today's low interest rates. Last month, I incorrectly speculated that the trend would cool sooner than later. It appears, in fact, that the refi boom is going strong. Perhaps the more important question is, when that does happen, when the interest rates tick up modestly, and home appreciation plateaus or even slightly dips. Now, what happens is much like the coal miners of yesteryear. We're going to have to dig deeper to maintain or grow production. And that's going to require more effort, market penetration, and creativity. In the meantime, the good news is that the conversion rates from the FHA case numbers to funding are going to be impressive thanks to the refinance transactions. And with that in mind, now is the time to build your rainy day fund to boost your future marketing and normalize your cash flow. Riding a wave is thrilling and profitable, yet as every surfer knows, once that wave has passed, you have to paddle out and set up for the next set. What are your thoughts about the potential interest rate hikes, HECM to HECM refinances, and that impact on our industry? Opine or educate us in the comment section below, and please share this video with other reverse mortgage professionals on LinkedIn, Facebook, or Twitter. Or you can subscribe to our YouTube channel. That way you never miss an upcoming episode. Just hit the notification bell. And if you prefer to listen to your reverse mortgage news, great. We can provide that for you with HECM World Weekly, the nation's only weekly podcast for the reverse mortgage professional. You can find it at HECMworld.com or subscribe and listen on iTunes. That's it for us. Until next week, happy originating.